Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, March 7th, 2012 is sponsored by Realtik. All right, let's get right into it today, folks. The markets are trending higher. A good solid bounce back day, but again, the volume is amazingly light. After doing almost 200 million yesterday, here we are at 2:30 p.m. Eastern Time, and the markets have only traded 90.5 million. So again, volume after yesterday's sell-off going right back to basically zero. The market's going back into their float mode. Now, many people would say, well, it was just a one-time event yesterday, no big deal. I mean, the Dow's up 81 points, Nasdaq's up 25, S&P's up 9. Great bounce back day. Yesterday's long forgotten. Well, the amateurs think that way. But if you're a pro, you have to be very careful here, because if you look at the larger time frame chart here and you go back to the pivot high here on the 29th, you can clearly see you've had a pretty solid sell-off to yesterday's lows, and now you're bouncing back. And as long as you stay underneath the pivot high, the 52-week high on the SPY, which mirrors the S&P 500 at around the 138.20 level, as long as you're under that, you have to be aware this could be the start of an in spirit of bearish consolidation, which will ultimately lead to another fall. Now, again, that's the way you have to stay on a conservative basis. You have to be a little careful here, and that's all I'm pointing out. Now, if by chance the market gets above the 138.20 level, then the bullish case is back on, and the bearish case is null and void. But again, remember the patterns, folks. You've had a nice little rollover. You're below the 20 moving average here on the daily chart, especially as long as you remain below the 20 moving average. I would be very, very careful in case the market starts to sell sharply again. All right, again, there's key things coming out of the woodwork here. The profits in these short trades that I've had on with my members here at InTheMoneyStocks.com have just been rocket ships and all-stars as we continue to bank profits. But again, I actually like the short side, especially as long as we stay under this 20 moving average. I still favor the short side, and I'm going to continue to look for new shorts if and only if pattern, price, and time align, which is part of the methodology here at InTheMoneyStocks.com. Now, again, folks, as I always say, if you want to get involved here, if you want to learn proprietary methods that will make you millions over the course of your life, if not more, then you need to come and join the free trial to the Research Center, which is for swing traders, and the Intraday Stock Chat, which is for day traders. All right, and again, it's a 7-day free trial. It's a beautiful thing. All right, try us out, make tons of money, and then generally people stay for life. That's just the way it works, because it's the methodology, it's the profits, it's the swing trade alerts I give out live, and so forth, that will make you into one of the best traders in the world, if not the best. All right, now again, this is your daily chart, beautiful rollover. And again, notice the bounce back today is a nice bounce back, but you're still underneath the 20, and you haven't even eclipsed yesterday's fall yet, so it's nothing to write home about. But I love how the media is making a big deal about it. Oh, we're back to the bullish case. Oh, it's going to go back up to the highs. We're going to go higher. Apple came out, by the way, this afternoon with their new iPad 3. Apple's actually trading off the highs of the day. Nice little sell-off here, although it's only down 15, 20, make that 50 cents now. But again, once they divulged the new iPad, it was kind of a sell the news event, and we have seen Apple now turn to the negative side down just a little bit. And that could cause a little bit of selling, because the S&P is made up of a large portion of Apple, meaning that if Apple goes up or down, I think it's something like a 15% weighting of the S&P. The Qs has a 17% weighting from Apple alone. So you can see Apple has a big bearing on the markets, and wherever Apple goes, you usually will see the markets follow. So again, right now Apple's basically on the flat line, but it is selling off a little bit after that iPad 3 announcement of whatever it contains, which again, it looks like a fantastic product, but is it warranting the Apple price increase we've seen? I mean, look at this since December, this run up from $380 all the way to a high of $540. I mean, that's a pretty impressive move, especially when you're thinking about the market cap in terms of billions. Essentially a $500 billion market cap now on Apple Computer or Apple Inc. All right, let's take a look at a couple other things today. The dollar is down 3 cents, and the dollar is what's been helping this market stay afloat. You can see this nice little drop. See this drop in the dollar right here, which happened right around 10:30, 10:45 a.m. Eastern Time? If we go to the SPY on an intraday basis, that happens to coincide perfectly with the pop in the markets. It's really the only move up we had in the market all day, which was this right here. You can see we started with a small gap up and went sideways. Then you got that one pop, and since then we've gone sideways on very, very light volume. The only increase upwards momentum that we've seen has been on that move in the spiders, which again came beautifully off the UUP fall right here. All right, and again, I want you guys to really pay attention to that, because remember, the markets do move inversely to the dollar. If the dollar is coming down, markets are going to get a pop. It's just the nature of the beast. And if we go to the daily chart of the dollar as well, notice how we did come up into the 50 moving average. I mean, there is resistance there. So it's not surprising to see a little bit of a pullback. You've had a little bit of an extended move on the dollar as well. But again, people are kind of back in that euphoric sense, which is good. If you're going to see any more downside, you can't get people too bearish too quickly, because then ultimately it means the move's over. All right, now let's take a look at a couple of the stocks out there today. IBM, which had gone above 200 a few days ago, is actually, after a pullback yesterday, getting a small bounce back to the 198-ish area. A little bounce there. Also, if we take a look at Caterpillar, which I am currently half a position short on still. And by the way, folks, some of you may wonder where I shorted Caterpillar based on a proprietary technique. And this is a good example. For those of you thinking of taking the free trial, you want to see these type of things. I mean, where did I short this? And by the way, when you take the free trial, you can find all time-stamped records of all my trades. All right, all my swing trades given out to the research center is time-stamped and everything. So you can go back and look and say, oh, yeah, he did take it there. But bottom line is, Caterpillar was taken right here as a short on the 27th of February. And look at how beautifully that thing fell. So we took half off the table already on the short, and we're holding the other half with a break-even stop. I'm still in the money on this $8. You know, basically 7% gain still on the second half. And I think it's going to go lower because you still have a very sharp fall. This is, technically speaking, this is a monstrous fall. And it does a lot of technical damage to the chart. So you have to assume that now you're getting the in spirit of pattern, which again could trade up. As long as it doesn't get above the 20 up here and trade sideways and the 20 comes down, this is going to be another fall candidate, and I should make some good money. I'm looking to at least make 10, 12% on this on the second half. Really knock it out of the park on that one. All right. Another play I've talked to you guys about that I took was MasterCard. MasterCard short based on proprietary levels, and this is time-stamped in the research center as well. Right there. That was my short right up here, 427.75. Look at how it came down to the 20. Now you're getting a normal little bounce off the 20. My guess is a bear flag will form, and we're going to see some more downside there as well. All right, and again, I will be releasing new shorting opportunities in the coming days. So again, I encourage you to take the 7-day free trial now so you get these next trades, because they're going to pay off in terms of massive profits to members or anyone who's in that research center that gets these swing trade alerts. All right, let's go to a couple other stocks here. JP Morgan, good bounce on JPM. Financials are bouncing back very, very nicely. And again, you can see JPM is up 71 cents today. Nice bounce back. JPM is trading right into the highs from 2 days ago. And if it continues up, the gap fill is going to be great resistance right up here on the charts. Let's go to the 10-minute chart and just take a quick look at this. It's interesting how JPM, and this is actually a level I gave out on JP Morgan. See this pivot low? Draw that across. And look at where would you have shorted this today, folks? The obvious answer is at the 200 moving average in red and this trend line, which is right here. And look at the little scalp pullback you would have received. And again, now you're above it, so you probably give this room to run, maybe to gap fill over the next day or so. I wouldn't be surprised if the market has a little bit more upside in it into Friday, into early next week. And then I think after that, after a bear flag forms on the daily charts, you probably see some good downside. Another good call that I've made, which many people have followed, First Solar. I said when this was trading at around $31, $32, $33, many people said to me in the intraday stock chat and the Research Center No Hype Live broadcast, and by the way, everything listed under the Research Center comes in that Research Center free trial. You get everything, No Hype Live, daily market reports, technical analysis videos, hot charts and alerts, everything else. But a lot of people ask me, where do I buy? Can I buy First Solar at a double bottom right here? And I said, guys, it's going to break lower. It's going lower. Trust me on this one. I said wait for about $24.50 per share. Sure enough, what happens? It breaks lower just like I predicted, and it's getting towards that key master level. Now at that master level, I may look to pick it up, or if the market's ready to pivot to the downside, I may let it go. If I like it enough, if the level is firm, if the market is telling me that it's a good play based on proprietary methodology, then of course I'll be picking it up, and I'll let you guys know that I am so we can all buy it and make money on it. All right, so again, it's just about reading the charts properly. And again, if I zoom out on FSLR, I mean, really an amazing run from the 2011 highs of 170 and change all the way down now to $25 and change. And again, it's going to go lower here still. Down a $1.89 today when the market's up. I mean, look at that weakness. I mean, to be down $1.90 essentially on a day where the Dow is up, 84 points is a pretty nice drop. That is a pretty nice drop on weakness today. So just another chart I wanted to go over there. Lastly, let's take a look at Google and Amazon. Google bouncing back a little bit, but notice how it's right into these moving averages. I still think this is a failed chart, and I think at this point it's going to fall. It had a breakout, and the breakout failed, which is very bearish. I think Google's going to head down here probably within about 2 weeks or 3 weeks or so. Amazon, taking a look at Amazon. Now, Amazon is showing some strength, and it's above the 2 moving averages here, which is slightly bullish. Your short-term trend line is going to be right here. This is probably where it trades up to. And the key is, I've been saying this, and I've been consistent on this, folks, is that as long as Amazon does not break this trend line to the downside, it can float up. See how you have a beautiful trend line down here? Now, once it closes down here on a daily close, it's collapsing. But as long as it stays above this line, it could float up. It could float up to this level, maybe even higher. So you got to know where the levels are. You got to know where to hold them, where to fold them. You got to know where to short, where to go long. And again, here at InTheMoneyStocks.com, we make it very easy by teaching you all the secrets that we know that have made us exceptional amounts of money over the multiple years that we've been trading, decades we've been trading. And again, we're going to give you those secrets, we're going to give you those methodology points, and we're going to give you our trades as well. So again, 7-day free trial to the Research Center, 7-day free trial to the Intraday Stock Chat. Come join us here at InTheMoneyStocks.com and start making your life much better with profits galore in any type of market. Take care, folks.